Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within those thick corporate reports. Today we're diving into a fund that is playing with two of the most talked about assets on the planet, Bitcoin and gold. Let's see if this STKd 100% Bitcoin and 100% gold ETF is hitting the jackpot or just stacking up problems. Hold on tight because this filing from Tidal Trust specifically, their STKd 100% Bitcoin and 100% gold ETF, gives us a peek into their world as of the 30th of September 2025. This is a semi-annual report, so it is a snapshot of how things were looking in the second half of the year. This report tells us about a registered management investment company, and what we really want to dig into are the financial numbers and what these investments actually mean for you. First off, let's talk about costs. For a hypothetical $10,000 investment in this fund, the costs over the past 6 months were about $58. That is 0.99% of your investment. Not too bad. Honestly, considering you are dealing with two pretty complex assets. This percentage, by the way, is an annualized figure, meaning if you held it for a full year at this rate. That is roughly what you'd pay. Now, for some key stats, the total size of the fund was around $99.6 million. That's a decent chunk of change. They had 7 holdings, which sounds like a small number. But remember, some of these holdings are things like Bitcoin itself or gold funds. So one holding could be worth a lot. The total advisory fee was a sizable $226,957. Which makes sense given they're managing a mix of traditional and digital assets. Looking at where the money is invested, we see about 0.44% in money market funds. These are generally very safe, short-term investments that provide a bit of stability. Then there is about 0.29% in exchange-traded funds, or ETFs, which likely represent other funds they're using to get exposure, and about 0.28% in cash and cash equivalents. This is pretty standard for managing liquidity. Interestingly, they also have about 0.025% in futures contracts. These are agreements to buy or sell an asset at a future date, and they can be used to manage risk or speculate. Okay, let's get to the good stuff, the top holdings. The biggest single holding at 43.5% of the total net assets was the First American Government Obligations Fund Class X 4.05%. This sounds like a very stable, low-risk investment, possibly a money market fund again, which is interesting given the fund's name. Next up, the direct plays on our hot assets. The ProShares Bitcoin ETF made up 17.8% of the fund. That is a solid chunk directly tied to Bitcoin's performance. Then we have the Spider Gold Minishares Trust at 6.4%, giving them exposure to gold. They also held the Fidelity Wise Origin Bitcoin Fund at 2.6%, and the iShares Bitcoin Trust ETF at 2.0%. So quite a bit of Bitcoin exposure through different ETFs. Then there is Gold Future at 1.8% and CME Bitcoin Reference Rate Future at 0.7%. These futures contracts are a way to bet on future price movements of gold and Bitcoin. It is worth noting that the futures are a smaller part of the portfolio compared to the direct ETF holdings. Now, let's see what is new. They're planning to change their investment policy. Currently, they have an 80% policy, but around December 2025, they will require investing at least 80% in securities and instruments that give exposure to gold and Bitcoin. This change uses the notional value of derivative contracts for compliance, which is a technical detail, but the point is they are reinforcing their 80% gold and Bitcoin strategy. They also added disclosures about options trading and the risks involved in July 2025. For semi-annual reports like this, they don't need to provide details on their code of ethics. The actual detailed schedule of investments is tucked away within the financial statements, which we'll get to. This is where the juicy numbers are. Let's break down the holdings here. Total investments make up 72.3% of the fund with a cost of over $70 million. The rest, 27.7%, is in other assets in excess of liabilities, which is basically just clean up for the statement. The total net assets are just shy of $100 million. Within the exchange-traded funds, the ProShares Bitcoin ETF is clearly the largest at $17.8 million, followed by the Spider Gold Minishares Trust at $6.4 million. These are significant holdings on the money market fund side, which is 43.5%. The First American Government Obligations Fund is valued at $43.3 million. It seems the majority of their assets are in this one very safe money market fund. This schedule shows their futures contracts. For CME Bitcoin futures, they have a notional value of over $77 million with an unrealized appreciation of about $731,000. For gold futures, the notional value is over $92 million with an even larger unrealized appreciation of almost $1.8 million. This means their futures bets are currently in the green. The total net unrealized appreciation from these futures contracts is about $2.5 million. Looking at their statement of assets and liabilities as of the 30th of September 2025, investments are valued at $72 million. They have a deposit at their broker for futures contracts of over $39 million. This is the money they put aside to cover their futures positions. Liabilities are around $17.8 million. Leaving them with net assets of nearly $99.6 million. The net asset value per S-share is $42.86. Now for the income and expenses over the 6-month period, they earn nearly $800,000 in dividend income. Expenses, primarily the investment advisory fee, came in at about $227,000. After expenses, they had a net investment income of around $570,000. But the real story here is the gains. They had realized gains from investments of $171,000 and a massive $13.5 million from futures contracts. On top of that, they had unrealized gains on investments and futures contracts totaling nearly $4.8 million. All this added up to a net increase in net assets from operations of almost $19 million. That is a very strong performance for a 6-month period. Comparing different periods, we see a huge jump in net assets from the period ending the 31st of March 2025. Net assets were about $24 million. By the 30th of September 2025, they ballooned to nearly $99.6 million. That is a massive increase in just 6 months, primarily driven by those investment gains. They also had significant capital transactions, with shares sold, bringing in over $82 million, and shares redeemed netting out to about $26 million. These are the per share numbers. The net asset value per S-share started the 6-month period at $26.76 and ended at $42.86. That is a total return of over 60% for the period. The ratio of expenses to average net assets is 0.99%, which matches what we saw earlier. This section tells us the fund is part of Tidal Trust the SEC, and its main goal is to seek long-term capital appreciation. This means they want your money to grow over time. They value their investments using market prices when available. Like for ETFs, for things like futures contracts, they use settlement prices from exchanges. If a price isn't readily available, they have a process for fair valuation, which involves judgment. This is pretty standard. The fund has elected to be taxed as a regulated investment company, or RIC. This is good news for investors because it means the fund generally passes on its income and gains to shareholders, avoiding taxes at the fund level. They aim to distribute most of their income and gains to minimize taxes. Here they explain how they use futures. They might use them to get exposure to commodities like Bitcoin and gold because it can be more efficient or cheaper than buying the actual assets. They also talk about margin requirements, which is the money they need to put aside to cover potential losses on these contracts. They acknowledge the risks, like imperfect correlation with underlying assets and large potential losses. This section elaborates on their use of derivatives like futures contracts for risk management and investment strategies. They mention using them when futures are cheaper or more accurate for their desired portfolio positioning. They state that the average notional value of futures contracts outstanding during this period was over $87 million. This reaffirms their assets, liabilities, and net assets, with the unrealized appreciation on futures contracts being a positive number, showing gains. This is where we saw those big gains from futures contracts, with a realized gain of over $13 million and unrealized gains of over $3 million added to the bottom line. This highlights the dramatic growth in net assets, showing a net increase of over $75 million in this 6-month period alone. These per share numbers clearly show the impressive growth in value for shareholders, with a strong total return. Now, the risks, this is crucial. They're very upfront about the volatility of Bitcoin. They warn about government restrictions, potential fraud, market manipulation, and security breaches on trading platforms. They even mention whales large holders who can influence prices. The lack of regulation in crypto markets is a big red flag they highlight. They also talk about forks, which happen when Bitcoin software is updated and can create new digital assets. The extreme price volatility is a major risk. And they state that trading Bitcoin might be more about market sentiment than traditional analysis. For gold, they gain exposure through futures and ETFs. They stress the volatility and unpredictability of commodity markets, influenced by global supply and demand, interest rates, and economic events. They also note that gold can have periods of flat or declining prices, and there is no guarantee it will hold its long term value. They also discuss risks related to derivatives, including imperfect correlation, potential loss exceeding the initial investment, counterparty default, and illiquidity. They mention that derivatives can create leverage, which magnifies both gains and losses. Futures contract side EP, they specifically mention futures contract risks like imperfect correlation, lack of a liquid market, potential unlimited losses, and the need for daily cash payments for margin. They also explain rolling futures contracts, which can incur costs if the market is in contango. This section details their agreements with related parties. Tidal Investments LLC is the investment advisor, and Quantify Chaos Advisors LLC is the sub-advisor. The fund pays a management fee of 0.99%, out of which the advisor pays for most other expenses. It seems complex on the surface, but essentially the 0.99% covers everything. Tidal ETF Services LLC handles administration and other services. They operate as a single reportable segment, meaning all their activities are managed together. This gives us details on their trading activity. For the 6 months ending the 30th of September 2025, they purchased over $31 million worth of securities and sold over $12 million worth of securities, excluding short-term investments and other specific categories. This confirms they had no ordinary income distributions in the period ending the 30th of September 2025, but did have some in the prior period. It also mentions the tax character of distributions and the components of distributable earnings on a tax basis. This explains how shares are traded on the Nasdaq. Most investors buy and sell shares on the secondary market through brokers, not directly from the fund. They clarify there are no front-end sales loads or redemption fees, but there are transaction fees. They acknowledge the ongoing market volatility due to economic, political, and global factors like inflation, recession fears, and conflicts. This adds a layer of uncertainty to all investments. Management has reviewed their financials up to the date of issuance and found no significant subsequent events to report. Alright, let's tie this all together. The STKd 100% Bitcoin and 100% gold ETF has had an incredible 6 months. Their net assets skyrocketed thanks to strong performance in both Bitcoin and gold futures. Even though a significant portion of their holdings is in a very stable money market fund, the 60% return per S-Hair is certainly eye-catching. However, we need to be clear-eyed about the risks. This fund is deeply tied to Bitcoin, and the report does not shy away from detailing the extreme volatility, regulatory uncertainties, and potential for manipulation in the crypto market. While they use gold futures and ETFs for their gold exposure, commodity markets also come with their own set of unpredictable swings. The heavy reliance on futures contracts, especially for Bitcoin, adds another layer of complexity. The fund strategy seems to be about capturing growth from these two volatile assets, but they've injected a lot of stability with that large money market fund holding. It is a bit of a balancing act. If Bitcoin and gold futures continue to perform strongly, investors could see great returns. But if the crypto market takes a nosedive, or if commodity prices become very unstable, this fund will feel the impact significantly, even with the safety net. In conclusion, this is an exciting but high-risk, high-reward play. The past 6 months have been phenomenal, but the future performance will heavily depend on the unpredictable nature of Bitcoin and gold markets. So, what is your take on this Bitcoin and gold ETF? Are you ready for that kind of volatility, or does the stability make it more appealing? Let me know your thoughts in the comments below. If you found this dive into the STKd fund useful, please hit that like button and subscribe for more. And as always, check out our Discord community in the description for more deep dives and to connect with other keen investors. Thanks for watching. See you next time.